you voluntarily do. Do you have life insurance?
Absolutely. And I
And
recommend it to everyone.
me too, actually. I would recommend to everyone. But do you trust the insurance companies? Are you 100% at ease with the fact that, um, let's say, I don't want to say you because I wish you a very, very long life.
No.
That
Hey,
never. I would say that never ends, but that's not possible. In When the inevitable happens, are you 100% at ease to the fact that they will be paying your claim to your family?
well, I certainly hope so. Otherwise, I plan to come back and haunt them. No, so like banking, um, you've got to do your own due diligence as well. You can't just leave it to the fact that, oh, it's regulated and I'm safe and I'm secure. So like banking, do your due diligence, check the credentials of the company, and as always, don't put all your eggs in one basket. So, whilst I would not recommend one mega insurance with one company, it's generally a good idea after a certain level for you to have, one or two companies, if at all possible, to support you. So you do it that way. Okay.
Assalamu alaikum. Welcome everyone to another episode of Taka Talks. I am delighted to be with you today, Leila, your bonus host. And today we'll be talking about the insurance industry, where it stands today, the challenges it's facing, and where our guest foresees it going in the future. I have the pleasure of introducing Pishu Ganglani. He's a financial services advisor, and I have known him for so many years and grown to respect him a lot. Thank you so much for joining us, Pishu. I'm delighted to have you today. How
Thank
are
you,
you?
Leila. Thank you very much. Thank you very much. I'm doing very well, and it's great to see how well you guys have progressed over the few years we've been talking together.
Thank you so much. Alors, our audience doesn't necessarily know you, so do you mind just telling us in a bit, introduce yourself and tell us what you do?
Sure. I've been in financial services pretty much for the last 30 years. I started off my career in Reuters, where we looked at treasury and risk management. I then moved on to banking, where I worked with IT services and operations in banking. I then worked as a senior consultant with McKinsey and Company, where we looked at, again, financial services primarily, but operations and sales transformation. I also spent a bit of time with MetLife, which is a Fortune 50, I think one of the largest insurance companies in the world now. And I had an entrepreneurial stint where I'd started my own company called North Ladder a few years ago, which I then exited late last year. So,
Amazing.
so yeah, no, so it's been an interesting ride all along.
A very, very interesting ride, and I'm sure we'll get so much value out of you today. So, Pishu, we're
Thank you.
here today to discuss, insurance. It's a $1 trillion industry. It's huge. It impacts our lives in different ways wherever we are in the world. And I wanted to ask you before we start. Of course, you spoke about MetLife, but what's the story behind, you falling into this industry? How was it? What's the backstage story of that?
Oh, coming into insurance in particular.
Yes, yes.
Insurance in particular. Well, I was with McKinsey and Company at the time, and a very close friend of mine had moved into MetLife, and gave me an opportunity to move along with him. And it sounded like a very interesting aspect of financial services I hadn't looked at before. I'd primarily been in conventional banking and treasury and risk management operations. So it was interesting to see the insurance side of the business. Plus, the opportunity was phenomenal because this was a company looking to merge operations across multiple countries. So it gave me an opportunity to see how insurance services work in various parts of the world, especially Asia, Africa, the Middle East, and Europe.
Wonderful. So, how long ago was that?
It's been about, I would say, about 7 years now, since I started my own company and launched it. So I left MetLife to start my own company, which was in technology, and I was with MetLife for about 3 years. But again, a
Wonderful.
pretty intense 3 years because we were looking at insurance operations across, I think it was across about almost 17, 18 countries.
Oh my God. Inshallah. Very, very, very nice. Thank you so
That
much.
was
All right. So,
exciting.
yeah, as an insider, I think I can coin you that. Why do you think the insurance industry is standing today? Do you think it's doing well on a scale of 1 to 10? How well do you think it's doing?
Well, I want to qualify up front. First of all, I don't have the sort of depth in the industry to be able to make, lofty long-term claims on this, but I can tell you the two or three areas that we were working on as well, which clearly pointed out as an opportunity for how the industry may evolve, going forward. And one of it is in when you do underwriting, when you're trying to, especially when you look at, life and health insurance. Um, Currently, the methodology that most companies use for underwriting are essentially demographic based. So we look at your age, your nationality, your sex, where you live, what sort of a, roughly what sort of a lifestyle you lead in the form of a few tests that we do, whether you're a smoker, non-smoker, etc. They're fairly generic tests from that point of view. And then we figure out based on that what we think your mortality would be, how long the probability of you being healthy and being alive. And we calculate it based on that. But we know in reality, people's lives are very, very different, right? You might take two people who have the same age, live in the same country, come from the same sort of background. But one is, super active and does a lot of, what do you say, extreme sports or high sports, and the other person is just a, probably a normal couch potato like myself, right? And the reality is, in both cases, your risks are a little different. So, in the event of the not so active person, you're going to have more concerns around their health when it comes to things like heart disease, etc. But you've also got risks in the other extreme, right? The person doing extreme sports, there's a greater risk that they will injure themselves. So these sort of things are not very accurately tracked. As a result, you end up bucketing everyone, in these buckets. Now, in all fairness, a lot of insurance companies have figured this out now. And in the world of big data and in the world of the kind of technology we have available with us now, they're rapidly developing faster and more intelligent routines on how to identify, a person's actual bucket that they fall into. So it's getting a lot smarter. But in all fairness, I think in the days when we were looking at this, we expected, if you look at an insurance company, there are three components to an insurance company. One is where you're doing the actual underwriting to try and get your probability calculation correct. The second one is where you're doing the investment of the funds that come through to try and maximize the returns for your group of insured, because that's how you're paying them off at the end of the day. And the third element is the actual operations of managing the claims, paying out the claims, etc. These are your three essential components. Of those three components, the first component, which is on the actual data underwriting, we think there's a lot of competition that will come from not the conventional insurance industry, but you might see a lot more of this come from, the industry that actually does data very, very well. I'm talking about, the Googles and the Apples and the Microsofts of the world, right? So that's one area, and I think a lot of insurance companies are recognizing the smart thing to do is to partner, with this new technology and actually, be ahead of it rather than wait for them to disrupt you completely. So you
So
see
let
that a lot happening.
So let's thank you so much. Let's take maybe a step back into what you were saying. I think the insurance companies found this themselves specifically on underwriting in this position because of something that was called accelerated underwriting. It was underwriting by a few questions, and bucketing
Mm.
people, as you've said, into some sort of things because they also had very, very solid historical grounds to say, okay, there might be a variation, but we should probably be in a safe place. Can you please
Yeah.
speak to that? Why they found the need to, first of all, get into that issue and how they're trying to get out of it?
Well, no, I think the way you look at it is the wider you make the bucket, yes, you'll have a lot of people fit into it, but if you look at it at the individual person's point of view, I am either overpaying or underpaying based on my specific risk.
I
So,
see.
so one of the things we looked at, the catchphrase we had is it possible to do what we call underwriting of one? How do I identify Leila in this example as, her individual sort of bucket rather than put her into a bucket with a few 100 million people in it, right?
Got
So
that.
yes, at the average bucket level, you'll be correct, of course. But if you look at it at the individual level, like I say, you're either overpaying or underpaying.
And I think the individual level for our listeners is the one that matters the most, right? It's your
Yes,
individual risk, and that makes
correct.
sure that you get accurate underwriting results that then
Yes.
translate into accurate pricing for you. All right, thank you very much. So, I am, I am not so much of the impression that the insurance companies are doing a lot, or they're going faster in the tech and everything to solve these issues. Can you speak to some examples of things you can see you seeing happening in the industry, and where you see them evolving in that way?
Well, I know that there's a lot of research happening in insurtech companies, and a lot of insurance companies have actually set up VC funds of their own, where they are sort of early investors in a lot of this technology, where it's headed. So I I I do believe that the industry is not sitting quietly waiting to be disrupted. I think they recognize that there's going to be advancements that are taking place. Yes, of course, as an industry, they're a little more cautious. And I think the smart way to do it is to invest in some of the cutting edge sort of startups that are trying to push the thinking in this area very much, and then see what the winner looks like before you completely change your model, over to it. Insurance has been it's an old business, and it's a business that a lot of people depend on. Having said that, you've also got the opportunity to bring in a lot more people who currently are not covered, by insurance, and that in itself is a huge risk, especially when you look at, some of our emerging markets and developing nations, where the average people, and if I, refer to India or Africa, average people don't have the kind of life cover that they require, which puts their families at risk.
Yes.
The ability to get smarter at how you do the underwriting and make the cost a lot more affordable allows more people to then come into, the insurance fold and basically give their families the protection that they need.
Do you actually think, I love that you brought up the point of access. That's something I am a big believer of, giving access to people, because people without insurance are pretty much their long-term financial security is at risk, right?
Yes.
And those are people that are generally families that are relying on a single breadwinner. And when that person, in the case of life insurance precisely, when the person is gone, then I have seen growing up,
Yes,
those families turn upside down, subhanallah.
of
So
course.
that's something that's very, very dear to my heart. But at the same time, I've seen the opposite actually. If you look at the cases in the United States, in Australia, in some parts of Africa, where insurance companies are actually pulling out of certain markets because it's no longer profitable, because the new regulations that come into place that make it
Yeah.
more
And
difficult, more expensive, yeah, for them to operate. So do you think there will ever come a time where they will be going into those markets that today they don't find profitable?
so it's a little bit like banking. So if we go back and look at the banking world, right? Banking had a specific way of working, and they identified a whole group of people that they said they wouldn't want to serve because it's too expensive for them, and they essentially created a vacuum. And that vacuum was filled in by cutting edge technology. Take Africa as an example, right? Banking didn't want to do payments because they thought small ticket payments were not going to make them money. And along comes, people like M-Pesa and OboPay who
M-Pesa, yeah.
completely turned the world upside down, disrupted it significantly, and then not only were they able to serve the emerging markets, but they're also able to take some of the lunch from the bankers, right? Because now nobody does it the old way anymore. Nobody goes to a bank, pays $25, to do a Swift transaction, because you can do it all online and do it a lot faster. I think the same thing will happen with insurance. So the smart insurance companies, and there are quite smart, are going to be investing in the startups, but pushing the startups into those areas. It is true that the current way that insurance companies work, and I'm talking about the conventional companies, cannot do this profitably, right? They have to dramatically change not just their approach, their technology, their whole philosophy needs to change on how they do this. The way you calculate and drive profits, the sort of services that you have to deliver, all of that will need to be changed. So the banking world went through this about 10 years ago. I think the insurance world will go through the same thing.
Wow. Okay. Can you please dive dive deeper into this? It's super interesting. Why do you think, what is preventing them at the moment in terms of the technology and the philosophy? Where are they standing now, and what would they need to change to get
Well,
there?
So it's a little bit like, again, it's a little bit like conventional banking, if I may say that, right? We were used to large ticket sizes. We were used to a lot of manual operations. We were used to a lot of uh, multiple sort of regulatory and compliance requirements that are all expensive. And we had to figure smarter ways to do that. And how did we do that? Well, first of all, we got better with technology. So we had technology drive a lot of even risk management now. We changed our policies so that we made it easier for people to come on board, and we would, do the math a lot better on what the default probabilities were. So that's the second thing you do. And the third thing is you would have to find more cost-effective ways of serving clients, right? You saw banks move away from, big monolithic five-star hotel branches to now they try and divert you completely online, right? So you don't have these big giant branches, etc. anymore. So these are the areas where you'd have to cut, make your operations much more efficient so that you can serve. Because whilst the individual ticket sizes might be small, I think banking realized that as a group, the unbanked and the underbanked were actually far larger. It was, in fact, my data is quite old. It comes from a World Bank report that is almost 10 years old now. So if anything, it must have become a lot larger. But the World Bank had estimated that the unbanked and the underbanked population spent goods and services every year worth $10 trillion, dollars, which was the single largest component of global GDP at the time. And this was a market that was completely underserved by banking. Insurance, if anything, is probably larger than that.
Yeah, 100%. Got that. Thank you so much, Pishu. Okay, so let me just go back. I had a question I wanted to ask you. In terms of everything you've said, it sounds easy. It sounds accessible. If Pishu thinks about it, why aren't banks doing it? Because you're saying, they'll have to do X, Y, and Z. It means they're not doing it at the moment. So can
Insurance
you speak
companies, I
to
mean,
maybe
banks
no,
are
no,
doing it. You're referring
no,
to
no,
insurance
no.
companies.
Yeah, I'm referring to insurance companies. Yes.
Right. Yeah.
Why are they not doing this at the moment? And my theory is that regulators have a big role to play into this. Do you think it's right? Do you think it's wrong? What are the different dynamics that go into there to make sure to make it such that at the moment they are not going into those markets directly?
So I think I think my best view would be that it's not lost on them that these markets are an opportunity. It's not that they're ignoring it. I think a lot of the insurance companies are trying out these models right now. You don't see it happen today, but I think this is just a matter of time. The idea is still to find the right model that works in these markets, and I don't think anyone has cracked the case on that yet. No one's figured out yet how to actually address these sort of emerging markets with the correct service model, with the correct pricing model, with how do you do investments, etc. Also, you mentioned regulators, which is quite important. Regulators themselves had to change significantly. And again, I keep looking at the banking world, and if you look at, and again, I keep referring to that because that sort of gives us a bit of a
I
bit of
think
an insight into
they're
how the
intertwined as well.
industry, correct, how the industry might involve. So what was regulators' views when it came to, say, for example, cryptocurrency about 5 years ago, 6 years ago, right? This was like completely no way. This is never going to work. This is by the way, it's fraudulent, et cetera, et cetera. Well, they've come a long way since then, right? They've learned how to regulate it. They've learned how to manage it, and a lot of regulators around the world are now treating crypto as another instrument and a security with the right kind of guardrails around it. So the regulators will need to evolve as well. It's not just the industry on its own, but generally the industry drives the regulators, right? And the way they do it is
100%.
by disrupting, right? So that's what I mean. Again, my view is the smarter insurance companies are sort of background investors in a lot of cutting edge startups to see who the winner is,
Actually, we've
and the
seen that.
regulators follow.
We've seen that in
Sorry.
China. Yeah, we've seen that in
Yeah.
China as well. I can't remember the name of the startup, but they were backed by one of the biggest Chinese insurance companies as one of their investors. And
Yeah,
I've actually seen that MetLife is dabbling into blockchain, and they've started something on
very much
Ethereum as
so.
well. Yeah, so it's true that they are, having their baby steps forward. But I also think this poses a great opportunity for those startups that are known for disruption and that are smaller and can, execute faster and all of that to, bring those solutions. And exactly as in the case of banking, where the big players and all of that will be catching up, later on. Okay, so let's talk about for the listeners. Let me ask you a question just quickly. Do you trust? Do you have insurance, right? Not the government mandated ones, because everybody needs them, but
Yes.
outside of that, let's take for example life insurance. It's something you voluntarily do. Do you have life insurance?
We'll be right back after the break.
Taka Talks brings you stories from around the world that will help you understand how crypto and Islamic finance can change our lives for the better. Subscribe and follow to keep learning.
Really do. Do you have life insurance?
Absolutely. And I
And
recommend it to everyone.
me too, actually. I would recommend to everyone. But do you trust the insurance companies? Are you 100% at ease with the fact that um, let's say, I don't want to say you because I wish you a very very long life.
No,
That never.
hey,
I would say that never ends, but that's not possible. In When the inevitable happens, are you 100% at ease to the fact that they will be paying your claim to your family?
well, I certainly hope so. Otherwise, I plan to come back and haunt them. No, so like banking, um, you've got to do your own due diligence as well. You can't just leave it to the fact that, oh, it's regulated and I'm safe and I'm secure. So like banking, do your due diligence, check the credentials of the company, and as always, don't put all your eggs in one basket. So, whilst I would not recommend one mega insurance with one company, it's generally a good idea after a certain level for you to have, one or two companies, if at all possible, to support you. So you do it that way. But again, you have to understand the reason it's very highly regulated is precisely to try and avoid that situation because hundreds of millions of people put their trust, in
Yes,
these institutions. And
that
we've
was
seen what happens when that goes wrong.
100%. That was actually the key word, trust. And I've asked this question to many people, and many times what comes back to me is, it's this opacity that's the problem, right? There's a lack of transparency. Do you feel the same thing regarding claims management as well? Do you
Yeah.
feel the same thing? Can you speak to that in terms of the need for transparency with insurance companies?
Yes. No, so in insurance, you'll find lack of transparency generally in again in three areas, right? One is right at the beginning, at the sales stage. And this is something even in MetLife we struggled quite a bit to make sure that our salespeople were open, honest, and transparent with their customers. But then, you know, humans being what they are, it's not that the salesperson is purposely hiding information away. In some cases, that was there, but not in all cases. In a lot of cases, the client's not able to understand the depth and the actual content. So you need to kind of dummy it down and simplify it to them. The problem is in that dummying down, sometimes you miss the important elements into it that come out. So
The
can
fine
we?
prints.
Well, yeah, the fine print, and I promise you, if you made the fine print large, I don't think it would make a huge difference,
Mm,
because nobody is going to read a 35-page document before
fair
signing,
enough.
on a
Fair enough.
policy, right? No one does that. I don't do that now, and I'm theoretically supposed to be educated enough to read this, right? So yes, there's a bit of an issue on both sides, right? Customer education level is quite low when it comes to this specific instrument and understanding how insurance works. And salespeople aren't able to educate the client completely. There is a certain element of mis-selling, and I think there's an opportunity for insurance companies to recognize that and either let the customer back out. Right now, in a lot of countries, once you sign a contract, you've got up to 30 days to back out of it. I don't think 30 days is enough. I think the way it should be is if there's an obvious case of mis-selling at any point, You need to give the customer the benefit of the doubt.
Yeah.
Yeah,
That's actually one thing I wanted to point out
yeah,
because, of course, people want to read. But I think the responsibility ethically also is on the insurance company to say, okay, don't read the 80
yeah,
pages, but these are
yeah.
the main
These are the
points you
key
need,
points.
the key points you need to be aware of. And
Correct.
putting that out clearly from the beginning to say, okay, it's a yes on my side and it's
Yeah.
a yes in knowledge, and it's not a yes in confusion.
Correct. Correct. So actually, one of the practices at MetLife that MetLife did very well is if you signed up for a more complex policy, someone from the operations team would actually call the client separate from the salesperson, have a conversation with the client to try and understand, has the customer actually understood what it is that they are getting into? And if they felt that that wasn't the case, then this would be brought up for review, right? So there was a bit of a, how do you say, a maker checker approach to more complex, complex
Yeah.
policies. But that's still, and that challenge will remain.
Yeah,
But there's
because
also an opportunity to give transparency to the client in the form of what and how claims work. Now, there are a lot of times when people make claims pretty much believing that they're fully covered, only to discover, oh my goodness, this wasn't covered. What is in, what is out? What does it mean when you have a pre-existing condition? How long do pre-existing conditions last? These sort of things, I think insurance companies could certainly do a better job of educating the customer.
thank you
That's
so
if
much
you're.
for that. All right. So, um, in your views, so we've spoken about underwriting, we've spoken about claims management. Is there any other area where you believe, insurance companies can do better? Or, wink, wink,
Yeah.
those solutions that are working to disrupt the insurance industry, what is something you will tell them focus on this precisely if you
I
want to make
think
a difference?
so. Here's the interesting thing. I think one area where both the insurance company and the client are fully aligned, right, where there is no conflict of interest, is the health of the client. Right? The insurance company wants you to live as long as you can because it's in their financial interest to do it, and obviously you would like to live as long as you can because that just makes sense,
Well,
right?
most of us, you never
Most
know.
yes, and I think insurance companies have a phenomenal amount of data, not just general data about people, but also data about yourself. So, an insurance company is, I think, in a unique position to try and influence you to improve your health. And they can do that with financial incentives. Now, a phenomenal idea that a few companies were looking at a while back, I thought was brilliant, was the ability to say, for example, if we as an insurance company were able to give you, a health tracker like Fitbit or an Apple app, etc., to track your
Yeah.
fitness and actually give you financial incentives to improve. So we will reduce your premium if you meet these, sort of, health goals, whether it's your blood sugar level or your heart rates or etc. I think they're in a unique position to do that. And it makes sense for both sides of the party, right? The client lives longer and continues to pay. The insurance company, delays the claims. Everyone's happy.
As much as I like that, there is this idea of, the insurance company coming into my life that it's a bit of I have a bit of apprehension, I don't want them knowing all of that, but at the same time, I already disclose a lot to them. So, yeah, so people,
Yeah.
humans,
Data privacy is a whole different conversation. So
yes, yes,
good luck with
100%.
that. Yeah.
All right, so let's maybe talk now about hypothetical futures. Let's dream, right? If Pishu ran the world and he had the ultimate power to make changes, you know, what would an ideal insurance industry look like to you?
Hmm. Interesting. I think the ideal insurance industry would be one where I have got significant financial benefits as well for improving my health. And that implies disincentives when I am not doing that because that's one way to manage people. It's not the only way, but it's certainly one way to motivate people to do it. I'd like an insurance app, if you want to call it that, to be able to actually guide me when I'm making day-to-day decisions. Guide, not necessarily control, and not obviously not what do you say, interfere with, but guide me when I'm making day-to-day decisions. Hey, it's time to take a break. Hey, have you thought about, we've looked at, have your health is not improving. Can we recommend this sort of a solution? I'd love for the insurance company to be tied into other service providers to be able to provide this to me to say, listen, we see your health is degrading. We've got a special deal with this specific institution that's able to help you, etc. Right? These are things that help, quite a bit. Right?
It sounds like AI to me because that's the future we foresee,
It
right?
actually is.
You
It,
know,
I didn't want to allude to that because AI has become such a buzzword,
yeah,
but
but in the future where, the AI is able to tell you, you've not done this today, shall I do it for you? Or actually do
yeah,
it for you.
yeah,
And then again, it poses the question, will I need the insurance company to be involved for that? But yeah, thank you very much, Pishu.
yeah.
I think we had a very, very fruitful conversation, even though, again, on the last point, I would still say, how complex would it be for insurance companies that I believe have interest in not paying out financial interest to start paying people for them to live longer. Of course, it's ROI. I invest this one and they will pay
Oh
longer.
no,
And
no, no. No,
yeah,
so let me clarify that. We've done a lot of studies in this area. It is actually significantly beneficial for the insurance company financially to improve the health of its policyholders. So the insurance companies know that very well. The trick is to figure out how to
how
do it.
to do
You
it.
know there's the old statistic around this one. I think it's been around for quite a while, but 97%, if it's 97 or 96% of smokers who had a heart attack, who were then told by the doctor that you have to give up smoking or you will die, pretty much 6 months later were still smoking cigarettes, right? I mean, after having a heart attack. So there's a certain element of human
Habits.
discipline here that you can't blame the insurance companies for, but they definitely see the benefit of doing it. I think the new I'd also like to say I think the younger generation that I see right now are a lot more health conscious than shall we say the older.
But
So hopefully,
it's access to information, right? Many times
yes,
my mother would say, I actually think our people back then in our villages, they died from diabetes and they didn't know, you know.
yes, it's also true. Yeah,
And they didn't know there was something like that. It was called like that. They
yeah,
didn't know the symptoms and they didn't know that what they ate was
was what
actually,
was causing it.
yeah. So yeah, that's 100% true. All right. So I wanted to ask you about reinsurance because, of course, I see how, as an insurance company, it would make sense for you to do all of these things. But at the same time, my understanding of reinsurance is it's passing on the risk, it's insuring the insurance company and passing on the risks so that at a certain level, if there is a certain percentage of claim, then the reinsurer will pay. And at the same time, sharing the premiums with that reinsurer. So, where is the incentive? Because I could tell as the insurance company, I'm not too worried to be honest, because anyways I have reinsurers, and if I have this level of risk, they'll take care of it, and the reinsurer has a reinsurer who has a reinsurer, and the list just goes back and back and back. So where do you see the incentive? Is there really a pressing incentive at the moment for them? In other words, is there urgency, or do you think it will be slow and steady?
It's a that's a much more complex question actually to address. But what I can tell you is you would break up insurance companies into three areas again. You've got the larger, the much more mature insurance companies who very much recognize, who don't depend as much on reinsurance for the simple reason that, in a lot of cases, they themselves are also acting as, reinsurers, right? Because they've been in the business long enough, to be able to do that. They recognize that the market is changing. They are looking for solutions to optimize the way they manage their claims, but also the way that they're able to increase their revenues and profits by doing two things. Number one, making the existing policyholders more efficient in the form that we talked about over here, better underwriting, better advice on health, etc., and also by
Transparency.
identifying right, and also by identifying new markets that they need to come into. That's your first. You've got the second bit where we do the insurance that we know we're very good at doing, but then we depend on reinsurers for more complex claims that is not our expertise, areas of expertise. And then you've got the third type where they're actually running more like a retail shop, right? They're very, very good at sales. They're very good at sort of perhaps the administration management, but they depend on reinsurance companies to actually give them the insurance protection that they require and to do the underwriting based on that. They're effectively more brokers than they are actual, full blown end to end insurance companies. So you've got these three different ones, and I think each one is on a different maturity trajectory on where they're going to go. I would look more at the larger companies to see how they're kind of pushing the envelope. And you alluded to the fact that a lot of them, are making investments into these startups. It's still a little early in insurtech, and I've seen a lot of insurtech companies come up with great ideas, especially when you looked at remote. What do you say? Remote medicine, right? Where you speak to a doctor rather than go and visit one, and that was all done in order to keep insurance premiums lower. These are all great ideas. And I think there's one area where governments do help. I love what the UAE has done, which was a few years ago, where they mandated insurance to everybody, right down to the blue collar worker. That I think was a phenomenal move. Now, when that happened,
Health
I
insurance, that
know,
is.
yeah, a lot of the insurance companies were not ready for that, right? They didn't have policies that were aimed at covering at that level. So the government not only mandated insurance, but also set limits to what you could charge. This forced the insurance companies to create new products. Some exited. They said, we can't do it. But the smarter ones figured out new products and they innovated as a result, to serve this.
Are super interesting. So just to push, and I promise this is the last question,
It's
just
all
to
right.
push on the idea of AI and it taking over. Do you foresee a future where we won't need insurance companies because technology would have figured out a way for people to organize themselves as, I don't know, community mutual protection funds powered by technology, and they wouldn't need the middleman of the insurance. Let's not take health insurance because there's an
Yeah.
entire system. Auto, there is an entire system, but in something like life insurance, do you foresee that future? And is it bright for you or gloomy?
Yeah. I mean, look, they've been a lot of so two things, right? I think I don't think AI is going to replace insurance companies. I think AI is going to make insurance companies significantly more efficient, and is going to be much, much better for the industry. But I don't think you'll do away with insurance companies altogether by creating what sounds like a cooperative sort of a co-op arrangement where people are mutually sort of being managed. Now, there are great products out there that could do that. So if you look at things like a DAO, right? And if you looked at, again, the way we've now got trustless transactions being run, on crypto. But to me, these are still tools that will be used by a company as opposed to used by lay people to create their own, for the very simple reason, I believe, and I may be wrong here, but I think this is a bit complex for an individual or a group of individuals to get together. So they're still going to need someone to do the day-to-day management and someone to structure it correctly. Because it's not just about how do you, pay out claims. It's also about how do you manage the money? How do you, manage the operations behind it? How do you make the investments? How do you make investment decisions? I don't think we've yet come to a point where AI becomes your investment manager. It'll help, but
Definitely
you
not.
know,
And actually, I was thinking more, blockchain exactly as you said, as DAOs.
yeah,
But you're 100% right. There will still be a need for, investment managers, people actually to develop that technology in the first place.
correct,
The DAO setup, the governance, the smart contracts, and all of that. So okay,
absolutely.
if we are aligned. I foresee that future, and I'm super happy to be working on a project that is, heading into that direction. Thank you so much, Pishu, for your
I know
time.
what you
I
guys are doing
appreciate you.
is.
Yeah,
I was going to say what Takada was doing is quite exciting, and again, one more area where you guys are really pushing the envelope. So we're excited
thank
to
you
see
so
what the
much.
next few years look like.
Thanks a lot. Thanks for your time. Thanks for your
Thank you again.
invaluable insights. And thanks to all of you guys for making this far. It's a wrap. Don't forget to like, comment, subscribe, and watch other episodes. Thank you so much for tuning in and see you in the next one. Assalamu alaikum.
Thank you, Alika.